Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 27, 2025, and we're diving into Carter's third quarter fiscal 2025 earnings report. Carter's, a leading apparel company for babies and young children, has just released its latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Carter's performance and the strategic moves they're making in the current market environment.
Revenue and profitability overview. Let's start with the top line. Carter's reported net sales of $758 million for the third quarter, which is relatively flat compared to last year. However, their adjusted earnings per share have seen a significant drop to 74 cents from $1.64 in Q3 2024. John, what are the key factors affecting their profitability?
Indeed, while net sales remained stable, Carter's profitability was impacted by elevated product costs, including higher tariffs and additional investments. These factors led to a decrease in net income to $11.6 million from $58.3 million in the previous year. Despite these challenges, Carter's returned $47 million to shareholders through dividends, indicating a commitment to shareholder value.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 78 cents for Carter's, but the actual adjusted EPS came in at 74, missing expectations by 4 cents. John, how are analysts reacting to this miss?
The miss on EPS, although slight, reflects the ongoing challenges Carter's faces with cost pressures and strategic investments. Analysts are cautious, noting that while the company is taking steps to improve productivity and cost structure, the benefits may take time to materialize. The market is likely to watch closely how these initiatives impact future earnings.
Strategic initiatives and cost management. Carter's has announced several productivity improvement actions, including store closures and organizational restructuring. Can you elaborate on these initiatives and their expected impact?
Carter's is aggressively pursuing cost management strategies, such as closing low-margin stores and reducing office-based roles by 15%. These actions are expected to yield annualized savings of approximately $35 million starting in 2026. Additionally, the company is facing significant tariff impacts, estimated at $200 million to $250 million annually. However, they plan to reinvest savings into high-return growth initiatives, which could bolster long-term profitability.
CEO's perspective and market position. CEO Douglas C. Palladini expressed confidence in Carter's market position and outlined new initiatives. What insights can you share from his statement?
CEO Palladini highlighted Carter's strong brand legacy and consumer trust, which are pivotal in maintaining their leadership in the young children's apparel market. He emphasized new product, marketing, and consumer experience initiatives that are beginning to show positive results. These efforts are expected to further strengthen Carter's market position and drive future growth.
Key takeaways. In summary, Carter's third quarter results reflect a challenging environment with cost pressures impacting profitability. However, the company's strategic initiatives and strong brand position offer potential for future growth. Thank you for joining us, John, and thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Carter's performance in the comments below.
Thank you for having me. It's been a pleasure discussing Carter's strategic direction and financial performance.